Bank Negara will highly likely, at a probability of 70%, maintain the overnight policy rate at 3% at its meeting this coming Thursday due to slowing growth momentum and easing inflationary pressures, according to OCBC Bank. OCBC senior ASEAN economist Lavanya Venkatswaran, in a research note on Tuesday, said that after the 25 BPS surprise hike at BNM's May 3rd meeting, the weaker incoming activity data points to slower growth momentum in the second quarter of 2023. She pointed out that on the domestic front, April wholesale and retail sales growth slowed to 3.2% year-on-year and 12.9% from 5.5% and 19.5% in the first quarter. While on the external front, export and import growth slowed to 9.4% year-on-year and 7.1% in April/May from 2.8% and 3.7% in the first quarter. Meanwhile, according to a Reuters poll, all but 3 of 25 economists polled expect BNM to keep OPR unchanged and at its current level for the rest of the year, marking the end of its modest tightening cycle. According to ANZ's head of Asia Research, Kun Go, a slower trajectory of growth and retreating inflation will likely prompt BNM to stand pat for the remainder of 2023. While headline inflation eased to its lowest in a year in May at 2.8%, core inflation, which excludes volatile items, moderated only a bit to 3.5%, suggesting the central bank will hold its key rate higher for longer. No one polled is predicting a cut this year. If BNM were to hold the rate, it would put it in line with its regional peers who have already ended their tightening cycles. With the US Federal Reserve, the European Central Bank and the Bank of England still intent on raising rates to control inflation, the ringgit has lost nearly 6% against the dollar this year, declining more than its Southeast Asia peers. A weak currency and resulting higher inflation feeding through expensive imports may restrict BNM from cutting rates anytime soon. Farm Fresh's share price continued to trend lower on Tuesday, closing at its record low for the third consecutive trading day on market concerns over stiff competition for raw milk. The stock tumbled as much as 16.8% to its intraday low of 99 cent before closing at 1 ringgit 14, down 5 cent or 4.1% for a market capitalization of 2.13 billion ringgit. It was the second most actively traded stock on Bursa Malaysia today, with 77.38 million shares changing hands. This comes after Australia's Bega Group warned that it would be expecting a decline in performance and an expected non-cash impairment in the range of 180 to 280 million Aussie dollars in its audited results due to the decline in Australian milk producing, which resulted in intense competition for raw milk. In a BOS filing, Farm Fresh came out to clarify its exposure position to milk production in Australia, saying that while it is also impacted by the less than expected decrease in farm gate milk prices in Australia, as it does purchase milk from third-party farmers, it says it is less affected compared to Bega. The Malaysian dairy producer explains that while Bega exclusively purchases 100% of its milk requirements from Australian farmers, Farm Fresh's exposure to third-party farmers in Australia accounts for approximately 14% of its total milk ingredients, of equivalent to more than 100 million litres in the financial year ended March 31st, 2024. Farm Fresh says 70% of its raw milk comes from its own farms in both Malaysia and Australia. Sapura Energy has decided not to pursue its appeal against the Sessions Court's decision to allow Economy Minister Muhammad Rafizi Ramli's discovery application to obtain documents concerning its former CEO Tan Sri Syahril Shamsuddin's remuneration package. Following that, High Court Judge Datuk Nik Hasmat Nik Mohamad recorded a consent order on Tuesday. Initially, Nik Hasmat had fixed August 8th to hear Sapura Energy's appeal. Previously, it was reported that Sapura Energy have filed an appeal against Sessions Court Judge Lailatul Zuraida Harun Elias Harun's decision on April 14th to allow the application. Lailatul Zuraida found the documents concerning Syahril's remuneration were relevant to the Pandan MP, as he is the defendant in a defamation lawsuit filed by Syahril against him. Lailatul Zuraida also ordered Sapura Energy to produce the document within 1 month, but the company appealed and sought an interim stay, which was granted on May 8th. Syahril had filed a defamation suit against Rafizi, who is also PKR Deputy President, over statements he made that were published in 3 articles via his social media accounts in response to ex-PM Datuk Sri Najib Razak asking the government to save Sapura Energy by injecting more funds into the company. Rafizi said that public funds should not be used to protect the elite. In his defence, Rafizi said he was justified in raising the matter and that Shahril's remuneration when he served as CEO was not commensurate with Sapura Energy's financial performance. The government does not rule out the possibility that the enforcement of the 1,500 minimum wage for employers with fewer than 5 workers, which began on July 1st, will have an impact on the country's inflation rate, says Minister of Economy Muhammad Rafizi Ramli. Bernama quoted Rafizi as saying that the government had carried out the necessary assessments before deciding to enforce it. He adds that the administration is hoping to keep inflation at a healthy level of around 2%. The minimum wage order for the entire country was gazetted on April 27, 2022 for implementation from May 1, 2022, while the enforcement of the 1,500 minimum wage for employers with fewer than 5 workers took effect on July 1st this year. Rafizi said the country's inflation rate in May 2023 continued to decline to 2.8% compared with 3.3% in April 2023, marking a 9-month consecutive decrease. He adds that what is important is that inflation can be absorbed by a wage increase that is commensurate with the value of work and the increase in the prices of goods. HCK Capital Group Executive Chairman Clement Hii purchased a 5.16% stake in the property developer for 50 million ringgit, raising his total stake in the group to 57%. According to a BOS filing, the Sarawakian tycoon's vehicle, HCK Equities, purchased 25.84 million shares on June 30th at 1 ringgit 935 apiece, which amounts to 50 million based on back-of-the-envelope calculations. The shares purchase raised Hii's indirect stake in HCK Capital to 56.59% or 283.14 million shares, while his direct stake remains at 0.41% or 2.05 million shares. Besides Hii, HCK Capital's other substantial shareholder is Kenanga Investors with a 13.81% stake. For the first quarter of FY 2023, HCK Capital posted a nearly 4-fold surge in net profit to 4.29 million from 1.08 million a year earlier, as an increase in sales and property development progress bumped revenue 39% higher to 44.61 million ringgit. Shares in HCK Capital ended 7 cent or 3.18% lower at 2 ringgit 13 on Tuesday, giving the group a market capitalization of 1.07 billion ringgit. Year to date, the counter has fallen by 0.47%.